Hey everyone, Kevin here. There's a lot of talk about what you should be doing and what you should be investing in and how you should live your life and yeah. Well, today, I'm here to tell you exactly what not to do. That is, I'm gonna talk about 5 things you should not be investing in, especially during an uncertain time or a crisis. I think these are very valuable and will hopefully end up saving you a lot of money. Although, I'm not suggesting that I'm hoping you lose money if you don't follow this advice. I just think it would be a good idea if you follow this advice. And don't sue me, bro. Yeah, I'm drinking out of a plastic straw, but it is my third time using it. So I'm trying my best here. All the glass ones, I still gotta clean them, okay? Rule number 1, never speculate on your investments. Warren Buffett most famously said that speculation is most dangerous when it looks the easiest. And so I have a few tips to help you never speculate. This is a personal favorite of mine, never buy on green days. If you wanna buy Target stock and it's up 10% today, don't buy it today. If it's down 10% today, buy it. Those are the kind of stocks I like to buy. Also, be careful following trends. By the way, I should have really emphasized the word following trends. It's one thing to predict a trend and profit from it. It's quite another to follow the trend. So for example, a lot of people threw a lot of money at Costco because on the news, they see people lined up out the door at Costco. That's a form of speculation that the price of Costco will go up because there's a crisis going on. It makes sense, it's logical, but there's also the risk factor that, well, maybe sales at Costco are just getting moved up and later they'll be lower because people are now stockpiling and hoarding, right? It's a form of speculation. If it's not something that's going to last for the long term, I'm not interested in it. It's too speculative for me. Now that might be different from how you invest, which is totally fine. These are just my POVs. Another one that's really popular right now is investing in Peloton because people think, well, if people are gonna be stuck at home and gyms are closed, let's go buy expensive Peloton bikes. Yet I personally don't think people are gonna run out and spend $3,000 on an at-home bicycle with a little iPad built into it because they could get the same exercise for $300 on Amazon. 2 notes here. 1, I kind of merged the pricing. I think it's actually $2,000 for the bike and $4,000 for the treadmill. But the second note is Peloton actually just suspended deliveries during this crisis, which is kind of like totally ironic. And I don't want to be that like I told you so guy. Like that's actually purposefully why I picked Costco as an example, just to say like I don't know what's gonna happen, but it's just something that I'm cautious of. It's why I'm not buying Costco, even though I like Costco. But look at what happened to Peloton. As soon as they suspended deliveries, all of that sort of speculative pricing went away. Now, I guess you could also say everything about Tesla is speculative because that stock basically goes up and down 20% every single day, which is weird. Now, I'm totally sorry if you own a Peloton. Look, I get it. They're really cool. I tried them out with Jack. I love them. I really wish they would make their platform open source, kind of like have an app store in it or like YouTube app or Netflix app in it, which they don't. You're kind of stuck in their system. Maybe that'll change in the future. I think it's a cool concept, but their price is 10x what an exercise bike sells for on Amazon, which is mind-blowing. But beside that sort of rant on Peloton, remember, it's speculation to say, oh, Peloton sales are gonna go through the roof because everybody's stuck at home. It's not that long-term belief. Only buy the company if you long-term believe in it. It's kind of like, oh, but Boeing is down 70% after this sort of crisis started. Why would you not buy Boeing? Because I don't like Boeing. I don't trust Boeing. I think they're total losers of a company. I've read every story there is and watched almost all the videos that exist about the 737 MAX, and every extra one I watch just pisses me off a little bit more about Boeing. Not a company I believe in, not a company I would hang out with in the long run, not a company I would even go to beer with. So not a company I would invest in. It'd just be speculating. For stocks though, I might be unique. For me, every stock trading platform has the sell button disabled, so I can't sell stocks. That's another rule that I have, is I can't sell anything. Only the buy button works for me. That's a joke, I just never sell. But the other thing that this relates to is real estate. I don't like speculating with flips, although I will do flips if they're profitable. I'll gladly do those, like that's okay. They're just not my #1 preference. At a time like this though, I would not buy a flip to speculate on a profit and flip it. Worst time to speculate on a flip is right now. Now, I did mention in a YouTube video a few days ago that the only safe asset during all of this might be something like investing in the dollar, which I'm gonna fully take credit for this because we all know it was my fault, but literally the 2 trading days after my video, the dollar surged. Thank you very much. But I don't know, currency is not my thing. Now, so we've got speculation out of the way. That's the big rule number 1. Don't speculate on investments right now. To me, now's not the time to do that. Yeah, you know, it could be really jazzy to scroll up and down Wall Street bets and see every single person post their really profitable put options. It's really frustrating, but it's also, not necessarily my style. I like the slow and steady approach. But hey, I'm not casting shade here. I'm just sharing my opinion on the 5 types of investments to avoid. So avoid speculating. Number 2, avoid really multifamily real estate right now, unless you're getting it severely under rent value. Here's an example. If there's a 10-unit apartment building you're thinking about buying, or a duplex, I don't really care what it is, and the tenants are paying $1,000 a month in rent, and then you do a quick little search on Zillow to see what other competing, let's say 2-bedroom, 1-bath units are renting for, and everything's renting for $975, $950, maybe there's some at $999, you're kind of priced out. Like $1,000 a month per rent per unit that you're buying is max price. That's market value. You're not getting more than $1,000. If anything, your rent's going down, which is bad because it literally means you're overpaying for your multifamily real estate, especially before an uncertain time. You literally want the opposite. So don't buy multifamily real estate if it's at market value, certainly not if it's above market value with the rents, not actually the price, the rents. So those dictate market value anyway. But the big thing you want to look for with multifamily is a deal that has below market value rents. There's strategies for finding these and determining all this, but if you can find something where all the units are renting for $700 and you do that quick search and everything in the neighborhood's renting for $1,000, that's starting to look pretty juicy. I like that idea. Oh, I just wanted to be upfront, by the way, I did extend the coupon code for an extra 3 days just because a few people were emailing me saying, hey, they needed a few extra days. And I thought, okay, all right, let's just extend it a little bit. I'm gonna bump the price on the courses after that because I've got a new release of lectures coming out. And so as I've always promised, as more content is released, the price does trickle up. Number 3, stay away from any kind of move-in ready real estate. That is something where you can literally just move into it. You don't have to do any work to it unless it's an off-market deal. If you find a deal that's off-market, you're usually getting a move-in ready deal that's like 5 to 10, maybe even 15% under market value. That's good. Like if you could get a move-in ready off-market deal, usually you're doing good as a buyer. The seller usually gets screwed if a deal's off market. But I would absolutely stay away from any kind of flipped real estate. Oh my gosh, now is not the time to buy flipped real estate. Stay away from that crap. It's one thing if a homeowner did a remodel, it's a whole nother thing if a flipper did the remodel, okay? That's bad, don't touch that. Stay away from turnkey real estate, which is basically like a glorified flipper that says they're gonna hook you up with a tenant too. It sounds horrible. No, especially right before a crisis. Do not go near flips, turnkey real estate. New construction. I would be very skeptical right now. I keep getting emails from new construction builders going, hey, we'll throw in an extra $10,000 if you buy now. New construction real estate, especially right now with this drama going on, they're freaking out. No, thank you, new construction. Bye, see ya. Now, yeah, that does mean I probably also wouldn't consider moving right now. If I were to move, as much as I would love to buy a wedge deal, if like a really ideal location came up in my neighborhood, which there are only like 15 houses that I really want, I would buy it no matter what condition it is because I want it. But I wouldn't buy it right before a crisis. I'll buy it after the crisis, okay? Again, unless I could, like if a fixer came up right now that I wanted to live in and it was a good wedge deal, oh my gosh, I would drop everything and buy that right now. So you can kind of see that dynamic. Like there are some things I'm avoiding, but I'm still pulling the trigger on good deals as they come up, 100%. You know, the other day I made a video where I was buying Tesla for like $350 a share and somebody's like, hey, well, it's up like 20% today. Are you gonna sell? I think it was an Instagram DM. Thanks for following me on Instagram, by the way. And I'm like, no, dude, like my sell button is broken. It doesn't work. My Webull sell button, which by the way, Webull, they said they were gonna end the sale on the 2 free stocks or whatever, the special they had, where if you signed up for Webull and deposited $100, you'd get 2 free stocks valued up to $1,400. They said they were gonna end that on the 17th. When I click on my link, it still says, get your 2 free stocks. And I'm like, you guys are welcome to still use it. I don't care. Like, no guarantees you're gonna get the 2 free stocks, but that is what they're kind of implying, given that the website still says that, so may as well. But yeah, anyway, in response to that, I'm like, no, I'm not selling my Tesla stock because it went up a little bit. I'm not speculating on this stock. I'm in it for the long run. As Randy used to say, I'm in it to win it. Now, this is a pretty basic one, but I mean, I wouldn't buy any kind of real estate fund or ETF right now. You're really buying at market value, and I think any kind of fund or real estate investment where you're not in control of it right now, you're basically buying at a premium. You're buying potentially at a top. You're not getting a wedge deal. It's worse than move-in ready real estate, because not only are you potentially buying at a premium or buying at the top, but on top of that, you're paying a bunch of fees. Like, no, and a lot of these funds that are like, oh, but we'll give you dividends. Yeah, you'll give me dividends after you don't pay any principal down off on your loans because you're just giving that principal to the investors as dividends. And then you're gonna take fees as well? No, funds and ETFs right now for real estate, staying far away. Hey, I could use this like a gavel. Number 5, do not invest where you don't have a competitive advantage as your primary investment. So here's what I mean by that. If you are a real estate investor, if you're a homeowner, if you've house hacked a duplex before, or you've started, you have a competitive advantage over every tenant in the world potentially thinking about buying real estate. You also have a competitive advantage over out of area investors because you know which neighborhoods are best. You know how to get the deals the best. You're gonna be the fastest on the deals. You've got the local connections. That gives you a competitive advantage in real estate. Anybody can build this competitive advantage. It's one of the reasons I say in my investing course, never invest 30 minutes outside of where you live, because then you start losing your competitive advantage. But investing in a competitive advantage is really where you get to see value where other people don't. And that gives you big gains on your money. Now, another form, and this real estate example is really a big one. A smaller competitive advantage is being a customer or user of the product. So for example, I don't invest in airline stocks because I'm not a plane customer. Sure, I ride on planes, but I'm really a customer of the airline, which I don't like airlines either, okay? I don't touch airlines. But I am a customer of Apple. And when they screw me on customer service for a dumb Mac, I get pissed and I stop buying their stock because I stop believing in the company. That may have actually happened or not. Or, when I drop some Beats headphones and the side pops off and breaks, I'm like, seriously? That they weren't like drop tested? Well, at least they've got indestructible glass. No, really, there is a huge value to being a customer of a company. I personally feel like I have a slight, I'm not saying this is a big competitive advantage. The big one is in real estate. But with stocks, I feel like I have a little bit of a competitive advantage being a user of a Target and seeing how their systems, their checkout systems are speeding up. Being a user of Home Depot and seeing their self-checkout system improving way faster than Lowe's. Even though I'm like super loyal to Lowe's, the self-checkout system at Home Depot blows Lowe's out of the water. Blows Lowe's. This is actually the same kind of competitive advantage that I thought I had when I was thinking about shorting JCPenney back when that Apple executive went to go work for JCPenney, and he goes to JCPenney and goes, all right, guys, we're gonna stop doing coupons. No coupons. We're just gonna do everyday low pricing. And I'm like, I've got experience with sales. I'm like, no, everyday low pricing does not work. Bad, really, really bad. Like, I'm interested to see what you're gonna do because you're gonna try to pull off the Apple, but even Apple does Black Friday sales, okay? Like, bad. And sure enough, the company basically goes bankrupt. I mean, I honestly wonder what the stock's selling for right now. I think it's under $1. It's exactly 50 cents today. That's crazy. Good old penny stock. Well, I guess on the note of coupons, now's that time to go to the links down below. Follow me on Instagram, use that coupon code, join me in the daily live streams every day at 9 a.m. where I get to talk to you about the market, money, stocks, real estate, and help you with your personal life problems. Thanks so much for watching, everybody. Really appreciate it. We'll see you next time.